Hey guys, welcome to Pippin and Dippin Academy's YouTube channel. We are so excited that you're here, and oh my gosh, Hunter has got some sauce to show you. But before you do, if you're new to this channel, I am Joe Von Richten, and I got Hunter the Pip Hunter Burkett with me. You don't see his pretty little face here because he's getting everything set up for you, but got some great stuff for you. But before we even show you any of the sauce, before he gives you any of the secrets or any of the cool stuff that he's just done this week, do me a favor. Pound the subscribe button, all right? And be sure at the end of this video, if you like it, hit that you like the video, put in the comment section that I subscribe. We love to send out gifts to people that say I subscribe. If you got a question, go ahead and put that in as well. Other than that, guys, we are so excited to share with you today what's been going on this week. Hunter's going to show you some setups. It's this week, correct, Hunter?
Yeah.
Yep. So he's going to show you some setups that he's taken. 100% win rate this week for the trades that have been called out in our group, and he's going to show you, I don't know if he's showing you all of them, but he is going to show you a couple of them and share why they were called out, why he took them, and all that good stuff. Without further ado, Hunter, it is all yours, my friend.
Yo, what's going on, guys? Yeah, if you want to see all the trades, I'm going to show you just two pairs so we can keep this video at a cool rate. But yeah, if you want to go to our Pippin and Dippin Instagram, I put them all in our stories, so you can go check that out. You can go in the right hand corner on our cover photo or our background photo and just click the Instagram link, and you can go in there and look at it. It's pretty cool. But yeah, I'm going to show you two pairs, CAD JPY, USD CAD. And also we've got some new members in the group this week, so they were pretty excited to be able to catch these trades with us. So yeah, we're up, like, I think we've called 6 trades this week so far, 6 or 7, something like that, and all winners. So been a great week, heck of a Thanksgiving week, right? So I'm gonna share my screen now.
And while he's sharing his screen, guys, just, you've already seen the disclaimer, but I'm going to say it again, just verbally. Look, it doesn't always work out that way, guys. We don't expect to win 100% of the time, but yeah, when you're looking for the right things and you got the proper trading plan in play, anything is possible. So enjoy. Yeah.
So right here on CAD JPY, okay, you guys have watched plenty of our videos to understand that, what we look for, we trade away from the peak highs and peak lows, okay? And when I see this stuff, it's very visible. It's very easy to see it, because what you want to do is inside your trading time, you want to identify the market maker hand. Okay, you want to see what you want to see what they're doing, how they're manipulating people, how they're taking people's money, right? And you can see that I've got boxed in 2 days in a row on CAD JPY, Tuesday and Wednesday, which was today. Okay, and the peak formation low. Okay, so I understood that. We've been dropping on CAD JPY for a while now, and when we started to make, this peak formation, at the time I didn't know that this price could have came here and dropped back down, right? And in this time period, I didn't know that this was going to be established as the peak formation low, right? So when I seen the next day, I seen how the market reacted. That's what I tell our students all the time. I react to the market. I do not try to predict it, right? So I seen how it reacted. We stop hunt really fast. We come down here, we got a really sharp fin, right? So what do? We go to the 15-minute time frame. That's our entry, and there she was. She pinged to the yesterday's low, right? Right there. And so what we did was we come down really fast, okay? We came up, and this is more of your what is that M pattern, Joe? I mean the W pattern. This is pretty much like your safety trade, right? Yep. Your safety W pattern, because the reason why is because it came down, made its left leg, came up, made its neck, and didn't return to the low, right? And gave you your entry automatically. Okay, so when you're 13. Close with a nice volume candle. Always wait for a nice volume candle. Okay, nice volume candle that closed above the 13 EMA. Okay, we closed above the market baseline. Okay, and then we entered the trade. Okay, it didn't really give us a pullback, but we did get a foot soldier in there, is what we call it. And then she took off. Was it easy? So, you know what I always teach my guys, I don't run a bigger than a 25 pip stop loss. Okay, so 25 pips for 50. Did we get it? Absolutely. Okay, 50 pips, 2 to 1. Okay,
Beautiful.
easy trade. Same thing today. Okay, same thing today. The reason why this is not a shark fin on the 1 hour time frame is because it didn't need to stop hunt. Okay, at the time it didn't need to stop hunt. So this is a type 1, you guys. If you haven't watched our 3 different types of W and M patterns, go watch that video. Okay, go really in depth on that. Okay, so we got a type 1, a really large stop hunt, but you can see how when we started to have a massive pullback here, it came and pinned to the bottom of Asian. It created Asian here. Okay, it came out of Asian and pinned there again. We made a neckline, right? Made it come back there and hit again with this candle, hit again. Okay, gave us some good price action here, and then it gave us a good nice volume candle. So we got a type 2 W pattern here. Okay, off the 200 EMA. Okay, which is the 50 EMA on the hour time frame. Okay, our market sentiment's up, correct? We're not breaking down and making lower highs, right? We didn't beat this low. We haven't beat this low. So our market direction is up. My anticipation for this trade is to go up, correct? So that's what we did. So right here, we got a bunch of discounted entries as the market pulled back here. Okay, we got into the market. We had a 20 pip stop loss, okay, for 40 pips. Did we get it? Absolutely. Okay, guys, when you look for this type of stuff, you identify this and you patiently wait for these entries, and you patiently wait for this to set up. You're going to win more trades. You're going to win more trades. I promise you. Okay, so we can go back to the 1 hour time frame, and you can see what's the market do. Rise, pull back, rise, pull back, rise, pull back. That's all it does, right? The difference is people are on the wrong side of it. Okay, most of the time when they get caught, or their stop loss is too tight. Okay, so what I look for is this same analogy that we always talk about. We're trading away. I bought, right? Boom, I bought, right? I'm trading away from this peak low. Okay, really simple, really easy too as well. USD CAD, I drawed it up for you guys. We had a full cycle all the way. I can't really see it. I can go back, but you can see this peak formation low here, all the way to there. Okay, was 300 pips. Okay, that's about right for this pair for USD CAD, the 3 times ADR. Okay, it just took it a while. All right, so once I seen this triple top, right, this multi-day M pattern, I thought this was the brand new peak formation high. Okay, we broke down. We did break down. So what was our anticipation for the trade? Was a pullback, right? Was a pullback, and then create the down cycle, right? It didn't happen, right? And you're like, well, how do you identify that, Hunter? It's really simple. You didn't get any, not Monday, not Tuesday. You did get it Tuesday, okay? But you didn't get it Monday. You got it Tuesday, but it never gave you the trade, right? So let's go look at this. And this is the reason why I wanted to explain to you why that's a trend reset, okay?
Turn off your auto scroll so it doesn't go back on you.
I did, got it. Anyway, so here's Monday. We came out of Asian to the low side, right? I'm not interested in that. What I want is for it to do this. I want you to stop hunt high, right? There's your peak formation, right? So what I want you to do is come here, retest maybe the neckline, consider what we call a stop hunt, okay? Create my pattern, then drop, okay? Did we do that on the next day? No, we didn't create nothing. We did look like it tried to set up here. It just kept moving upwards, okay? It just kept moving up and never did set up for us. Okay. So when I seen that, and then the very next day, Wednesday, okay, we come out and we stop hunt to the low, we create a neck, and we create a second leg, and we're starting to go back to the upside or above the 200 again, the 50 EMA on the 1 hour. I'm saying, okay, could I be wrong right here? Yeah, I could. But I was right about this being a trend reset. Multi-day W pattern with a little bit of divergence on the 1 hour, and we took off, right? What was my next move from here? Okay, rise, pull back, W pattern, boom. Okay, was it a shark fin on the 1 hour time frame? Let's look. No, it wasn't. Right? It doesn't, guys. When I talk about 1 hour shark fins, when I say those, they're more of a high probability set. Are they going to happen all the time? No. Right? But that's where the three types of M and W patterns come in: type 1, type 2, and type 3. That's the reason why we speak so much highly about them, is because you need to get good at them. Because not all the time there's going to be a 1 hour shark fin sitting right there where you can go down and be like, okay, this is a nice W or M pattern, right? Okay, so that created, that moved up. What was our next move? Okay, our next move was what? Same thing. I'm going the wrong way.
Yep, keep on going. There you go.
Turn reset. Okay, here we go. Right here is where we were. Okay, same thing, guys. Same thing. Stop hunt to the low, make a neck, come back down. Okay, look at your TDI. Divergence. That's what you want to see, right? Nice volume candle, nice pullback. What's our stop loss? Guys, I always get if I get a nice pullback like this, I always get 50% of the candle. So boom, let's do 20. Oh man, we barely got that. Almost 40 pips, almost a 2-to-1. But here's the thing, guys. When you have a risk to reward set, you know in your mind what you want. Okay? You know in your mind what you want. When you hit a 1-to-1, so 20 pips was here, okay? Always break even. Go ahead and break even. There's no reason to stay in the trade. There's no reason to stay with your stop loss back here, because you would have got hit, right? So all this trade would have done was come back and hit your break even, which is fine. Sometimes it does that. Or guys, Joe and I have been doing a lot of studying, a lot of back testing. That we did back testing on 1-to-1s, 1.5-to-1s, and 2-to-1s, and 1.5-to-1s really came out on top when it comes to risk to reward, right? And you think about it, guys, if you have a 70 or a little bit higher, 65% accuracy on your trade, your trading strategy, you know, a 1.5-to-1 is really, really good. You can make a lot of money with a 1.5-to-1, right? So in the meantime, like when you thinking about it, let's look at it. When you looking for like a 5-to-1, 6-to-1, 7-to-1, just think about how many trades. If you have a stop loss that's fairly good, right? 15 pips plus, 25 pips. Think about how many trades that you're going to have to lose to get to that one trade that hits a 5 or a 8-to-1, 10-to-1. You know what I mean? Those 10-to-1 trades don't happen every day, right? If you're an intraday trader, then this is the type of setups that you're looking for. Not trying to drag out a trade for 4 or 5 days. That's a swing. You're a swinger. You need to go to the higher time frame. You need to have a set of rules. You need to come at the market with the mentality. That's what I'm getting is a 5-to-1 or better, right? When you become like that, to me, that's swinging, right? So, yeah, if you would have set up a 1.5-to-1, you would have smoked this trade, right? You would have smoked it, okay? Which is totally fine. Now this one here, same thing, guys. We came down, made a little W, little type 2 pattern. Okay, more or less the type 2 pattern. We're still above. Our cycle's still up, right? We have plenty of room to move up. We're on a brand new cycle anyway from the trim reset. Okay, we didn't get nothing this day. She just pinned left from London. Okay, that's all she did. Right now, when this came down and created this, there's our volume candle. Okay, we're above the market baseline. Hell, we're above the 50 static line on the TDI, right? We're above all the EMAs, which is good. Okay, we get 2 pins. So if you got limit orders, what your stop loss was? Well, I always do 15. I like to have a 15 and above. 15 to 25 pips is max for me. Okay, 10 is pushing it, right? I'm not saying you can't get that. We'll scale down to 5 minute, maybe get a little 10 pip stop loss, but you're going to get hit a lot more. Okay, because you'll have liquidity spikes and you're going to be right there in the crosshairs and they're going to get you, right? So boom, 15 pips. There's a 2 to 1. There's a 3 to 1. There's a 4 to 1. Okay, that was easy. I'm just saying in general. So really, reality, there's your 5, 6, 7 to 1 right there. But guys, that doesn't happen all the time. Okay, that trade come up and pull back hard. Okay, so that right there is there's your trade. So what I'm saying is you're gonna miss this. So-called here, there's 40 pips, there's 60. What was your stop loss? 25. There's 50 right there. There's a 2 to 1. But you barely got it. You see what I'm saying? You barely got it, and then it came back down. I love 2 to 1s, guys. I really do. Like, I shoot for a 2 to 1 a lot, but
he's not lying, guys. I'll hit 1.5 to 1, and he'll hit his break even and be like, darn it. And he was like within 2 pips of his take profit. Yeah, it happens.
Yeah, it happens. So, but really, the moral of the story is, guys, like, these setups are so nice, man. Like, you can go back and back test all of, of what this market does. And that's all we're looking for, right? So let me bring up a little deal here. And guys, I mean, if this can't tell you exactly what I'm talking about, W, rise, pullback, trade, rise, pullback, trade, reversal, same thing. That's all you're doing, guys. That's all you're doing. Here's your type 1, comes past Asian. Type 2 sets up on Asian. Type 3, I don't know if you guys can see it because of the zoom is in the way, but it sets up on the middle of Asian. Okay, this is market maker. Okay, so in your mind, I want you to answer yourself right now. This is what? This is a type 2 pattern, right? I would consider this a type 1 if it came a little further, but it was right there on the line of that, right? So
yeah, type 1, guys, is usually like about 25 pips, either above the Asian high or below the Asian low. So
yeah, let's go look at
and I'll put that at the end of the video too, Hunter, for them. I'll put the link at the end of the video so that they can see that.
Yeah, so like right here, guys, here's perfect example. I've already still got my boxes around them. I've still got my boxes around the trades that we had taken. Okay, so look at here. Type 1 comes out of Asian. Left leg comes up right here. Got a nice candle. We played around in here for a little bit, but still your entry was tight. You got some more discounted entries, 15 pip stop loss. What'd you get? 30 pips? Easy money. Here, type 2, right there. We got a close above the 13 EMA right there. Good, nice volume candle. I like to see them more than 10 pips. That's a 10 pip candle. Boom. Entry. Boom. 15 pips. Boom. 25. We came back. There's 30. That's a type 2. Left leg was an Asian, so multi-session double. Okay. Came. See, they fooled you here. They fooled some people here, right? I'm not saying you couldn't have made money here, but this wasn't the real move. That wasn't the real move. The real move was this. Okay. The real move was this. Type 1, left leg, neck, right leg, nice candle. Look at how much discounted entries you could have got. Half of it, right? Your TDI is meeting up. 15 pip stop loss for 30. Boom. You hit it. Smoked it. Okay. So that's what I'm talking about. Look how this is. I see, man, I can talk to you guys till I'm blue in the face about this because I know I'm so right about these trades being so high probability, because not only are Joe and I taking them, our students are taking them. And they're catching these trades, guys. Most of these trades are straightaways. They're like your instant profit, and then you're sitting on a call with us and you're talking, and you got your charts minimized, and then when you come back 15 or 30 minutes later, you're freaking 25 pips in profit. You're happy. You know what I mean? So, you know, this is the reason why I stay with it. I stay with it because I know these perform. I know these trades perform, and they're very easy to identify. Look here, there's another one. Our market direction's still up at that time. Okay. Left leg, neck, right leg. We got out of the band, into the band. I know y'all heard that. I probably would have took it on this candle here. Discounted entry, 20 pip stop loss for 40. Did we get it? Yes, we did. Right? Here's a little scalp that could have been taken. I got my blocks around it. I think we did take that. Another little scalp. Guys, when you get, remember, you guys know that I've always talked about this. If you're in a cycle, like we were well in past level 2 at this area, we countered this. Okay? We countered it. 15-minute shark fin, our scalping strategy, 5-minute M pattern. It was beautiful. Boom. Okay. Here's another trade right here. I think we talked about this. Boom, boom, boom. Left leg, right leg. Oh, the candle was here. We got a pullback here. 15 pips for 30. There it is. Here was a nasty one. Perfect. Left leg comes up, right? This probably would have been tricky. You probably would have ended up right here, and you probably would have got stopped out, which is fine. It's cool. But then you could have got right back in and got your money, right? Which is fine. It's totally cool, right? 25 pip stop loss, and then for 50, easy money.
Guys, the trick is on those second legs too. Like, if it doesn't have a nice size wick on it, a nice little stop hunt on it, it's probably not a good entry. That, you know, like on the earlier entry that he was talking about, where you had probably got stopped out on that before you re-entered, there wasn't a big stop hunt there. It was and it wasn't a 10 pip candle either. It was like, you know, like a 4 or 5 pip candle. Remember Hunter always talks about it. The entry candle should always be at least a 10 pip candle.
Yeah.
So.
And then here we are back where we were talking about. Okay. You guys should be trading USD cats. Great pair. Great pair. Okay. We also took this down. Okay. This was pure, just as if I go to the 1 hour time frame, guys, we're sitting at an area of value where, see, I got my box running through here. Okay. And then also there's an area right here as well. So it did come here and give me a reaction. Okay. It did give me a reaction. So why not? Why not? You know what I mean? So at this area, we didn't stop hunt to the low, right? If we did, the hunter would have been thinking, oh, okay, we're setting up for another rise, right? So it stopped hunted to the high and gave me my left leg. Comes back down, gives me another leg. Closes above the 13. Look at the divergence. We're overbought too. Boom. 15 pip stop loss for 30. Did we get it? Yes, we did. Yes, we did. trades like these guys, I am, if you catch the left leg and you get like a entry like right here at the top of it, I would go ahead and set up a 20 to 25 pip stop loss. The reason why is because that right leg could be extended and it go up there and smoke you out and then drop. There ain't nothing more freaking frustrating than being in a right trade and getting smoked out and then running. Right? How frustrating is that? I'm more frustrated with that than I am actually losing a trade, like a trade going 50 pips the other way on me, right? So this lesson is like spitting some sauce, guys. Like, this is some sauce. You know what I mean? Like, I'm literally giving you the sauce. I'm literally giving you the roadmap. You know what I mean? If you want the pilot, you want Joe and I as a pilot, then you need to come join us at Pippin and Dippin, man. It's fun there. You know what I mean? It's fun. We're creative. We run live trading calls every day. We run a Monday night meeting where people get to come and ask their questions. We look at charts. I hold a Friday night meeting. I bar replay the previous week, kind of like I did with you guys right here, but I bar replayed on TradingView. I let our students call out trades. If they lose, then we analyze it. Why? Does it meet your trading plan? Do we need to tweak something? Right? Do we need to tweak something? And you're probably wondering why. Like, why is Joe and Hunter spending this much time? You know, it's just like, guys, I was once at where you're at right now. I was once there, and I was wishing I had something like this. So there's two things here. Joe and I care, and then another thing, we're very passionate about Forex.
Right? We don't want you guys to go through the losses that we did. There's nothing worse. And there's great teachers out there, but most of them that are giving the value at the level that we're giving it are charging thousands upon thousands of dollars. That's the bottom line, guys. And we said when we put the program together, our academy, it's for people that are new or experienced traders that just haven't found that winning strategy, that consistency. And I'll tell you this right here now, guys. We'll give you the secret. You don't even have to come into our academy. Figure out what's between your ears, clean that up. The strategy is the easy part. What's between your ears is what's holding you back from being the trader you want to be and making the money you want to make.
Exactly. And if you do join, then you do join us, you get to get this arrow indicator, which is pretty dope.
Yeah, with some other cool tools too.
Yeah, other cool tools that we have. With that, Joe, did I miss anything?
No, man, that was awesome. Hey guys, just to reiterate, I don't know if you realize there, he wasn't showing a lot of trades where he was counter trading, right? He was showing trading with the trend for probably a good 90% of the trade setups that he showed. You only counter trend trade if you know where you're at in the cycle, and you never ever counter trade at level 1 in the market maker cycle. Never. You're asking just to, give away your money. You might as well go ahead and light a fire with your dollar bills. Right?
Exactly. So, when you start getting disciplined with this market, you'll start to see the results. I promise you that.
Yep. Well, that was fantastic, man. No, you didn't miss nothing, man. That was fantastic. Guys, I'll add to that. He talked about the different types of M and W patterns. So the type 1, type 2, and type 3. We have a video on that. You can go and search it, or it'll be at the end of this video. I'll actually have it as a link at the end of the video. Was there something else that you threw in there too that I need to throw in there, or just that one?
We'll put in the description. You also seen at the bottom of my screen, I didn't have 25 pairs in there either. Yep. Okay, that's really important. You know what I mean? You do not have to have 25 pairs. I don't even care if you become a seasoned trader in the next 5 or 6 years. You don't need it. You don't need it, guys. I'm telling you. So.
Yep. I trade 5. I think Hunter trades 5 or a couple more maybe than 5. I don't know. And there's plenty of trade setups. That way you're not over trading. You're not forcing stuff, and you're not missing out on trades that you should be taking because you're looking at you know, 20, 25 pairs when you have no business looking at any more than like, you know, 3 or 4. So with that, guys, I think that's it, Hunter. So again, the links are in the description below. If you were interested in the Academy, learning more about it, check it out. Just an FYI, when you go to the page, we have 3 options. We have our Academy, we have our VIP, and then we have our one-on-one. So if we give a lot of one-on-one time already through our Academy, just for our general Academy, because we think that's important. However, if you really want, like, you know, set 90-minute sessions with us, then you can do that. You can book that. That's in there. The VIP program is actually a mastermind program. We run it. It's a 30-day program. Right now, we don't have the next date set, so you don't worry about that one yet. We'll be announcing that later. We're thinking that's going to run again in January, but we've got to button up some stuff before we announce that. So Academy, really, and one-on-one time with us. You can do either or both if you want. It's up to you. But with that, guys, thank you for stopping by. We appreciate you. I think last week we celebrated 200 subscribers, and we're growing this week. So those of you that are new, thank you. Remember, guys, if you didn't see the video about our next goal that we're shooting for is 1,000 subscribers. When we get there, we're gonna have a nice little giveaway. So if you haven't seen that video, go check that out as well. Other than that, guys, thanks for stopping by. We appreciate you, and we want to wish you a very happy Thanksgiving, and we'll see you next time. Until then, guys, take care. And Hunter, what else you got to do?
Dipping, guys.
Right on, pippin' and dippin'. Let's see you. We'll see what you guys got. Take care. We'll see you soon.
Peace.